10, 9, ignition sequence start, 6.
Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is February 8th, and we're going to get started here with a protocol update from Mav. So this is from yesterday afternoon, and Mav says, hey everyone, 3 quick updates from me. Number 1, if you're interested in restaking, come and get your questions answered by EigenLayer during the next community call here in the Discord chit chat channel at 11 PM UTC on February the 8th. That's today, and that's 6 PM Eastern time. That's right. And most of the restaking discussion so far has been taking place in the EigenLayer thread, if you want to go and read about that. And it says ETH Denver volunteers are still needed. If you're attending, please help out by indicating your availability here. It says every little bit helps. And then there's a link to the conferences, and it says there's still time to register for the inaugural Rocket Pool DAO conference, Denver Liftoff. And then there's a link to the Token Proof website where you can go and register for that. So let's have a look at the conferences section and see what's going on here. So this is people putting down what their availability is for shifts. And we've talked about this on Rocket Fuel before, and about who can volunteer on what days mostly. So how many shifts, like each shift is 3 hours, will you be able to help with? 1, 2, 3, 4. I put down that I can help with 4 shifts. And then it says, what days will you be available for? React with the day number, not the date. Day number 1 is the 29th. Day number 2 is March 1st. Day 3 is March 2nd. Day 4 is March 3rd. So March 2nd and 3rd is when the Denver Liftoff conference is happening, of course. So you can see that there's a clear divide in between people who will volunteer in the first 2 days versus those who will volunteer in the second 2 days. So here on day 1, we have 12 people indicating that they can volunteer on those days. On day number 2, we have 14 people indicating they can volunteer on those days, which is really cool. But on days number 3 and 4, we have far fewer people who say they can volunteer, because sadly a lot of the Rocket Pool audience will be at the Denver Liftoff conference. So I guess if you can help out with the Rocket Pool booth during those days, that help would be greatly appreciated from everyone in the team. Okay, so next we are going to be talking about Jasper's new hybrid theory paper, which is all about the relationship between Rocket Pool and EigenLayer. I'm going to do a little bit of a deep dive into this post. So it's going to take quite a while. So it's called Hybrid Theory, Rocket Pool's Middle Way Between Native Liquid Restaking and Pure Staking. The first thing that Jasper does is talks about like what exactly is EigenLayer, and how we've seen liquid restaking tokens really capture a lot of attention in the last few weeks. And then he says, in this essay, I will describe how EigenLayer can be used without additional adding existential risk to a protocol. It suggests a unique collaboration between Rocket Pool and EigenLayer. So then he says this is called hybrid restaking, where you connect the Rocket Pool and EigenLayer ecosystems, enabling node operators to participate in AVS services, but isolate the rETH LST from the restaking risks. And he says this can be done. And then he's saying that there's a $60,000 bounty that we'll talk about at the end. And he says to ensure that there's a DAO support, this will be voted on by the broader PDAO. I think the vote will probably start maybe on Monday. I don't want to say for sure, but it looks like the sentiment is strong. I guess Patches is working with the RPIP editors to make sure everything is good before the vote goes live. So that's going to happen. And then Jasper's just explaining to you how to vote depending on what you want. And then it says, for those of you who need some background, read onwards to learn about how we got from proof of stake to hybrid restaking and why this is the ideal path forward. Here there's an image that we're going to come to again later where we'll talk about it. So he says there's all these buzzwords here like proof of stake, delegated proof of stake, liquid staking, restaking, liquid restaking, eigenpods, native restaking, hybrid restaking. He says there's a lot of confusion around these terms as people use these terms like correctly or maybe incorrectly or imprecisely, and it kind of confuses what everything means. So the first thing, like one of the first things that Jasper is going to do in the paper is kind of explain the definitions. He says in this essay, I'll attempt to define what each term means and what their differences are, and include a brief history of consensus, the emergence of liquid staking, the establishment the EigenLayer proposition and the various formulations of restaking. I will further establish why Rocket Pool, among all staking protocols, is uniquely ready to partner with EigenLayer based on the idea of hybrid restaking, where LST holders have senior debt and LRT, that's liquid restaking token holders, have junior debt for a high yield. Lastly, I will make the case why Rocket Pool embracing EigenLayer is good for Ethereum writ large and explain the details of the approved bounty. So the first thing he starts with is the history of consensus, and of course, crypto started with proof of work. So Bitcoin was doing its thing, and then a bunch of other tokens came along that did something called merge mining. That means that you could mine one token, and at the same time that you were mining one token, other tokens would get mined simultaneously. And the most famous example of this, of course, is Litecoin also merge mining with Dogecoin. So he kind of explains how there was professional stake services stepped in and began to dominate the market. Centralized exchanges were quick to provide services. Total stake has that was me skipping forward. Yeah, he says merge mining did not provide the economic security that it promised. And then he moves on forward to the Ethereum proof of the consensus, moving to the beacon chain and stake proof of stake. And he says that the earliest stakers were the home stakers, but then Lido and other exchanges got in and acted quite quickly, and they began to dominate the market. So he says centralized services exchanges were quick to provide services as well. He says the total stake had a hockey stick growth from the advent of liquid staking tokens. So that's another growth period now. And says by providing a wrapper for stake, liquid staking protocols quickly dominated Ethereum stake, which was good because the only other viable alternative at the time was centralized custodians. It says the complexities of running a node clashed with the widespread desire for passive yield. So you could run your node yourself, or you could just swap your ETH for an LST and get some yield and also use the tokens in DeFi or other places. And then he goes on to explain how, after the beacon chain went live, he says the influence of solo staker peaked right at the beacon chain launched and has trended down since. But he says that the merge mining, the way it was meant to be, is like the way it is now. So he says restaking will do that. So you'll have staking and restaking, and you'll be getting your staking security that you're providing, but also restaking on top for other services. This is EigenLayer as the next step forward for proof of stake. Unlike proof of work merge mining days, restaking provides real assurances through economic security on chain. And he kind of explains a little bit about what that is. So let's go into the definitions and find out what all these are. So restaking is the act of reusing capital that is securing assets in one way for use in another way. So he says in the context of EigenLayer, when people say restaking, they usually mean the act of taking an LST, that's like rETH or Lido's STETH, and depositing it into EigenLayer to eventually secure an AVS, which is an actively validated service. So those are the AVSs are the main services that EigenLayer is going to be running, and you'll use your LST basically to secure those AVSs from providing them with economic security. So then he goes on to explain a little bit more about how restaking works and what its purpose is, and he kind of explains that there's services like EigenDA, which is EigenLayer's data availability service that they're going to have, and then Espresso, which is going to be a shared sequencing service. About how these will probably be built on or around EigenLayer and have a lot of capital flowing through them. So he then explains that restaking is not rehypothecation. The collateral is always present as long as the underlying LSTs are solvent. And then he says that there's how you can get attributable security versus pooled security, and Sriram, the founder of EigenLayer, kind of explains that, and there's a link to a video. So then Jasper explains that a little bit as well, saying about how if you pull together and have your security, you can actually do really well with that and help each other get very, very secure economic security. Then he explained what liquid restaking is. So liquid restaking is when you deposit a token into a staking service and get a wrapped token back, which is an LST. That LST represents your stake. Some of them are rebasing, which means the value of the token goes up as the value of as you get staking rewards, like Lido's LST. And I think that rebases every day. So you get new STETH tokens every day. And others are non-rebasing, like Rocket Pool's rETH, Coinbase's cbETH, and others as well. So those are the ones that grow in value against Ethereum. And as they grow in value against Ethereum, then they then they the value of the token goes up against Ethereum. The value of the token represents that increase in staking rewards that accrues over time. So then he says the general concept is that you can deposit your so this is liquid. Then he goes on to explain liquid restaking. Sorry, not just liquid staking. Liquid restaking, the way this works is you get your LST that I just described, and then you deposit that into EigenLayer, and then that is used to perform services on EigenLayer, like act as a security. So he says the general concept is sound. We went from liquid staking to liquid staking, so why not go from restaking to liquid restaking? And the idea here is that with liquid restaking, it means as you deposit a token into restaking, you also get a liquid restaking token back. So it's kind of like regular like LST, but the underlying token represents something that's being restaked on EigenLayer already. So he kind of explains how the services now that are coming up that are going straight to the liquid restaking model, and how they are kind of working at that level instead of working at an LST level that's then later being deposited. So next he goes on to explain eigenpods, and eigenpods are when you change your withdrawal address of your Solar validator to be EigenLayer smart contract. So you're giving them first dibs on any punishment that your node will receive. That's called an eigenpod. And the benefit of that is that you'll get your ETH staking rewards, but you'll also get EigenLayer rewards. And by them having control over your withdrawal address, it means that they get to like they account for any slashing or any punishments that you might have on there. Then it says native liquid restaking. So this is when a protocol does it in-house. So this is what I was talking about earlier, like stuff like Puffer and EtherFi. So what happens now is when you deposit your money into EtherFi, for example, Jasper here mentions some of the companies that are coming up. He says, that they include Swell, EtherFi, and Puffer. So those are liquid restaking tokens, native liquid restaking tokens, sorry. So what this means is when you deposit money into one of those services, then they will set up an eigenpod. So the withdrawal address for that validator that service sets up will not be the service itself. It will be EigenLayer, and then after EigenLayer, it will be that service. So they're giving EigenLayer a senior debt, which means it gives EigenLayer first dibs on any punishments before they can perform any punishments themselves. So they're going like one step further. So Jasper here in this section is quite important. He says, while I will be sharply criticizing native liquid restaking protocols in this section, none of the criticism is targeted to any team in particular, and I wish them all the best. So here it says the risks are as great as the benefits, if not greater. This is if a bug occurs on EigenLayer, it's plausible that native restake tokens could have all their assets drained. EigenLayer is the senior debt holder for native restaking protocols, as the initial withdrawal address from the beacon chain is pointed at EigenLayer rather than Lido or Rocket Pool, as it would be for restaked rETH or stETH. If EigenLayer is severely compromised, which I hope it never happens, but if it does, then natively restaked protocols are going to get hit the hardest. So this is stuff like, he shows a picture here of, from the Ethereum beacon chain, as you withdraw your rewards, first it will go to EigenLayer, and then this will then go back to Puffer, which will then go back to the user. So it adds an extra layer before the protocol, which is EigenLayer, which have like the senior debt on that validator. So Jasper says, in considering senior and junior debt, one must ask, what is the ultimate role of an LST? Hasu has a wonderful piece talking about their vision for stETH as a global competitor in the world of moneyness. So here there's talking about like, how stakes should work out and what the consequences of that will be. But he says LSTs are monies we use like ETH or USD. They're not yield farms, nor are they idle locked funds. LSTs carry the burden of evaluating tail risk for the entire crypto industry. This is with EigenLayer, LSTs, and by extension Ethereum staking will become the first proper interchain marketplace of security. However, when LSTs compete as monies, they can only sacrifice so much security and so much liquidity to EigenLayer, and natively restaked protocols LRT will be competing with rETH. On a risk-adjusted return basis, the most resilient LST wins. The winning LST will be the balance of yield, liquidity, access, and security. I believe the only way to accomplish this for an LST with the goal of being a major competitor is by retaining senior debt and still participating in restaking. So this is Jasper's idea, which is what he's really promoting with this. It's something that he calls hybrid restaking. So hybrid restaking kind of takes the liquid restaking model and kind of tweaks it. So he says here the definition is the act of pointing a subsidiary withdrawal address of an Ethereum validator to the EigenLayer contracts such that the node operator can participate in AVS activities. So the main difference between hybrid restaking and liquid restaking is that the withdrawal address of the protocol, from the beacon chain goes to the protocol first and then to EigenLayer before it goes to the user. And that is up to the user to, set that up if they want, and that's their choice to do that. So what's really interesting here is there's a diagram here that kind of shows that happening. So from the beacon chain, it'll go to Rocket Pool. From Rocket Pool contracts, they will send rETH's portion to the rETH holders, and the node operator will get the node operator's remaining share. Before it goes to the node operator, will go to EigenLayer for them to slash or punish if there's any punishment due. Before then, what's left goes to the node operator. Now, what does this accomplish? Right? Why is this so important? Well, Jasper here says, what does this accomplish? First, it protects rETH. So the fact that rETH gets first say means that rETH can never be punished unless there's some kind of massive Ethereum-wide slashing event, in which case, rETH would get hurt. But if there's a normal slashing for a user, or if there's any kind of EigenLayer punishment potentially, then that particular user who's staking that has the rETH on their node, if they get punished for that, the rETH portion will still go out first. So that will always be safe. So that is one of the big differences here. It says the flow of capital is from Ethereum staking contract to Rocket Pool to EigenLayer. Each node operator in Rocket Pool has a withdrawal address that is connected to the individual ETH bond. In Rocket Pool, that is lower than the 32 ETH natural bond, down to 8 ETH plus 2.4 ETH of RPL. In the event of a disaster, no rETH holder can be damaged, as Rocket Pool holds senior debt on the LST's claims. And then there's more detail about how that works. And it says Rocket Pool will always get its money back first for the rETH holder. So here the rETH holder never gets hurt, never gets impacted. Regardless of the slashing amount from EigenLayer, the rETH holder will always be made whole. It's the node operator who will get punished. And if the punishment is more than the node operator's collateral amount, then EigenLayer will have to take that punishment on board themselves and absorb the loss. It's never Rocket Pool that absorbs that loss. And via Rocket Pool, it'll be rETH holders, of course, is what Rocket Pool cares about. So he says there is one extreme circumstance where rETH holders can be slightly impacted. This is if there's massive adoption of the EigenLayer by Rocket Pool node operators and a bug occurs on EigenLayer, then those validators will all be put into the execute. This would dampen rETH's APR, but it would not hurt the underlying capital. Further, if such a bug were to occur, the entire restaking market would be hurt, and rETH would still be the least affected. So even in the situation where it's bad for Rocket Pool's rETH holders, it's still better than any other situation. And then he says risk favoring node operators are free to explore the AVS marketplace and take on all kinds of exciting responsibilities while never hurting the bottom line of rETH holders. This helps ensure that rETH is safe and predictable enough for a global money asset while still allowing node operators and rETH holders access to bonus yield. Together we can make decentralized home staking profitable again. So one of the points that Jasper was making earlier in the liquid restake token section was that because of the fact that the AVS yield will be in flux, it'll be changing, it won't always be guaranteed. What will happen is, and it has added slashing risks, what will happen is that services like Aave or Gravitar, just as an example, or Maker would be less likely to let more degenerate DeFi activities happen, like hyper staking or folding that we've talked about before on Rocket Fuel. Those kind of services wouldn't happen with a LRT anywhere near to the same levels as it would with an LST, because there's inherent risks involved that just aren't there with an LST like rETH as there would be with an LRT. So that is the kind of risk stuff that Jasper's talking about here. And he says, let's talk about the charts. So here Jasper has a table showing you who gets punished how. So if you are an Ethereum node operator and you get slashed, if you are running an EigenPod, you could lose up to the 32 ETH in the worst case scenario. With native restaking, you can lose up to 32 ETH as well. with liquid restaking, you could lose up to 32 ETH, and with hybrid restaking, you'd only lose the mini pool bond. And then with the AVS operator, it's the same situation. All the other instances could lose up to 32 ETH. With Rocket Pool, it's only the mini pool bond. If there's an Ethereum bug, or everyone can lose up to 32 ETH, depending on how bad the bug is. And with the EigenLayer bug, everyone else can lose up to 32 ETH, but the Rocket Pool node operator would only lose their mini pool bond, not anything more than that. And then Jasper here talks about, he says, that the hybrid restaking is the safest option. It says when users delegate to stake to Rocket Pool validators, the rETH token is secure in almost all adverse outcomes. The nature of Rocket Pool's node operator bond provides built-in slashing coverage in the event of Rocket Pool node operators getting slashed by Ethereum. With Rocket Pool holding senior debt for rETH, node operators losing their funds will not harm rETH collateral, no matter what they have opted into. And then over here, you say that, who is at risk in these situations. So with an eigenpod, if you, with the AVS selection, it's up to the person running the eigenpod what they want to opt into. With native restaking and liquid restaking, then the protocol chooses which AVS is they opt into. And the same is with hybrid restaking, where the node operator chooses what they opt into. And then with node operator selection, with eigenpod, they choose it themselves. With native restaking and liquid restaking, then it is the protocol that chooses what's going on. And with hybrid restaking with Rocket Pool, then it's the node operator themselves. And with EigenLayer debt, all the others have senior debt to EigenLayer, but with hybrid restaking, then EigenLayer only gets junior debt, which is a much better model for the LST holders, for rETH holders basically. And then he's talking about rewards that you would get as a node operator, as a node operator for Rocket Pool, basically as a hybrid restaker. So if you had an eigenpod, which is like your solo validator pointed towards EigenLayer, then you would just get the base yield from Ethereum, and you would get base yield from the AVS rewards that you would get from EigenLayer. As a native restaker, you would have to pay commission on the Ethereum yield and on the AVS yield, so you'd get reduced yield for both. With liquid restaking, again, you'd be paying commission, so you'd get reduced for both. And with hybrid restaking through Rocket Pool as a node operator, you would actually get boosted rewards for both of them, because you would be getting commission from rETH holders, and you'd be keeping a share of that for yourself. So here, Jasper says the chart everyone is after, comparison of yields. Running an eigenpod is the base case, similar to solo staking on Ethereum. When running an eigenpod, there are two sources of yield. I just kind of explained that as well. It says, finally, hybrid restaking promises to be the best way to earn extra income through EigenLayer. First off, Rocket Pool provides boosted Ethereum income, roughly 42% higher returns than operating a solo node. The boost comes from the commission paid to node operators by rETH holders. The hybrid restaker would earn full AVS reward service. Further, in the future, it's a working goal to enable users to delegate the entire Rocket Pool network. This feature would make it far easier for a node operator to accrue delegated stake and earn commission on top of their base AVS yield. So then Jasper says this is a perfect match. To do this, he says the winner of the world's reserve asset of the universal crypto money and the most liquid utilized token will not go to a liquid restake token. It's not even clear that it will be an LST. It's funny, if you ask a crypto Twitter GGen what they care most about, absolute yield is near the top, risk-adjusted return is near the bottom. This is the aforementioned battle for moneyness flips the DGen mentality on its head. Risk is the most important factor, and LRT is likely to be actively managed by a DAO and volatile. These are not the traits that you want in the reserve currency. We can see a real-world example of this from the hesitation of centralized custodians to get involved in restaking so far. The inherently higher risk is a major sticking point with restaking tokens. This is one of the only opportunities where decentralized operators have an edge over large centralized custodians. So this is people like, Lido node operators, for example, pointing their validators to EigenLayer. You just can't imagine it happening. So then Jasper kind of talks about, he says Lido's ST-ETH currently offers the highest APR, higher APR than rETH. However, in a world with strong restaking adoption, we could reasonably see a large swathe of Rocket Pool node operators earning the bonus income. The bonus income can be indirectly passed on to rETH holders, either by direct revenue share, which is the system that I think would work best. It's kind of what we do now, from buying and burning rETH, or by reducing the commission charged from rETH holders. Yeah, one of those two things basically. And this is the benefits can be achieved without exposing rETH, the token, to any extra risk, which is just win-win-win according to Jasper here. So then he says EigenDA. Now, why would EigenLayer want Rocket Pool's node operators, right? So he's explaining here about how EigenDA works with having, like, it'd be a kind of Validium where the data would be stored on the EigenLayer, data availability layer, and the proofs would then be sent to Ethereum. So it'd just be proofs that would be on Ethereum with the execution and the call data being stored elsewhere and happening elsewhere. So it'd be like a Validium is kind of layer 2 that is on Ethereum basically. And he says that these work best when they have very large node operator bases, and no one has a larger node operator base than Rocket Pool does. He says it will be the network with the most EigenDA nodes that can capture the most value, while also providing the most value back to the network. So then he talks here about throughput, and basically EigenLayer, in one of their papers that they wrote, said if they have 100 nodes, they can get 10 megabits per second. However, Rocket Pool, of course, has 3,500 nodes with around 2,500 probably unique people running the service. So if all of those were using if they were using AVSs for EigenDA, then they could boost that throughput from 10 megabits a second all the way to like 250 megabits a second, which is absolutely incredible. And I think this is kind of beyond EigenLayer's wildest dreams at the moment for how much data they could potentially get access to by using Rocket Pool node operators. And that, of course, is just rough numbers. That's not to say that's exactly what will happen. So it says EigenLayer can, this is Jasper saying this, he says EigenLayer can supercharge the largest union of home stakers on Ethereum. This partnership will also drive more users to their own nodes as they are tempted by the potential to earn Ethereum staking rewards, ETH commission, RPL rewards, AVS income, and AVS commission. At the same time, Rocket Pool will enable EigenLayer to offer new services to Ethereum, thereby improving its value proposition. Services like pre-configurations, shared sequencing, and Oracle services would all increase the value of the Ethereum network. This is a win-win, as Rocket Pool provides more censorship resistance and decentralization to Ethereum than any other LST, probably more than all other LSTs combined. So Jasper's using really strong language here to kind of explain how this is working. And he says, in this world where EigenLayer is a serious player in the Ethereum proof of stake, this world is better off having Rocket Pool as EigenLayer's major partner. And I've been saying this for a really long time. It just kind of makes sense. But that's just as an aside. So here then Jasper gives information about the bounty, and he says that this bounty is open but is subject to a vote, and basically it's a bounty for $60,000. He thanks some EigenLayer team members for reading and providing information, and then he kind of explains the bounty and what the bounty aims to do, which is basically to set up this relationship between Rocket Pool and EigenLayer, where Rocket Pool will have the senior debt, EigenLayer will have the junior debt, and you can use AVSs on Rocket Pool. So the milestone 0, this is the research phase, which is researching what is needed to make this happen. Research EIP 7002 and pre-signed exit messages. There's a $10,000 payment for that. Then milestone A is write the contracts. So it says once the PDAO has signed off on the desired integration method, the team will be ready to build the outlined contract, allowing node operators to register with EigenLayer and function like regular validators in their network, including slashing. This ought to be verified with the core Rocket Pool team member, ideally Kane, as a plausible solution. This is milestone B, is feedback and integration. This is where you figure out how everything's working, how everything's looking, and then potentially releasing it for public use. And then milestone C is front end and documentation, is building the terminal user interface if you need that, or front end website app if you need that, and then the documents for how to get it all set up. So that has $16,600 as well. So milestone A, B, and C have $16,666 each, which is $50,000, and then the research phase is $10,000. But of course, this will all be up to a vote coming up very soon, that I talked about in yesterday's episode. And then Jasper, has some guiding questions that came up from Notional about what it would look like if, in a forced exits world, which is most likely what we need, how, what form it will take and how the integration will look. So here Jasper finishes, by showing the chart from yesterday that shows that node operator ETH into Rocket Pool has been flat, over 200 days. He says, Rocket Pool brought thousands of node operators to Ethereum. Now it can do the same for EigenLayer. If we don't, there is a real chance someone else will do it for us. Let's fix this chart, meaning let's get a whole lot of ETH coming into Rocket Pool because we need it with Rocket Pool. So yeah, that was a nice, 25-minute summary of Jasper's paper. And there's still a whole lot more to talk about, so let's get to that now. Okay, so along with Jasper's blog post, he also wrote this Twitter thread, and it says the greater partnership and restaking is about to be born, Rocket Pool and EigenLayer. And then this was like describing the whole article basically. Maybe I should have just read this out for you all, but I thought the paper itself would go into a greater detail. One thing I should say before I carry on, if I made any mistakes, confusing terms, it's not Jasper's fault, that's my fault. It's because of me not explaining them properly. Jasper did a great job of explaining everything in the paper. So if there's anything that wasn't clear, just go and have a look at Jasper's paper or the tweet thread and get an idea of what is going on there basically. But this thread got a whole lot of love, like literally thousands of people have seen this, and I think it's like really been a good thing that he's done here and got all the information out. This thread was also featured on the Daily Gwei today. This thread on the article itself, where Anthony Sassano was talking about Jasper getting this paper out about a relationship between Rocket Pool and EigenLayer. And then he said that, there was so much depth, but he didn't really have time to go through the whole thing. But he said, if you watch me, and gave me a shout out, and he said, if you watch the Rocket Fuel or Weekly Orbit, we'll do a bit of a deeper dive on those shows. And, this week's Weekly Orbit, we didn't really go into the details too deep down as much as I did on Rocket Fuel today, but, this is a different kind of crowd. But anyway, I wanted to say thank you to Anthony for continuing to give Rocket Pool like really cool coverage, and also for the shout out, because you all know that like I love Anthony and the Daily Gwei, and like so much of what he does inspires Rocket Fuel, so thanks for that. So it wasn't all roses and sunshine. Val responded a little while after the article went out with kind of like his feedback to it. So he started with the risk section. He says that having senior debt is only a huge benefit if you can exit before your buffer is used up. In this case, that would mean we need to supervise EigenLayer side for any junior collateral slashings or force exit when needed, or trust EigenLayer to do it, and have no AVS that allows for an attack to be conducted alongside MEV theft. It says the first is potentially doable with purpose-built ODAO duties just for EigenLayer. He says the second seems intractable to me. And then he says Cascade Fund. He says if we allow for looping LRT, what Jasper in the paper said that shouldn't happen, and says that issues damage to AVS security. It may be a lot easier to attack an AVS alongside MEV theft. This is particularly interesting because lots of threats of liquidations tends to be a particularly nice time for big MEV opportunities. And he says there's maintenance risks. Is Rocket Pool responsible for never breaking the EigenLayer interaction? What if we wanted to, for example, allow multiple ETH withdrawal addresses in a new release? Would we need to work with EigenLayer and get them to a new release first? Because otherwise our new contract would allow for theft from EigenLayer. I don't know what the future holds, but I do know that maintaining interface compatibility is not free in software. It might even require a dedicated employee to just monitor the interaction. That's my addition instead of Val saying that. And he says then there's a brand risk as well. He says the single benefit I talk most about Rocket Pool versus others is that we have the lowest tail risks in all of LST world. This is enmeshing ourselves with an unknown factor that dilutes that message. For EigenLayer, having Rocket Pool on board is orange washing. This is if the zealous Rocket Pool community approves, then it must be okay. This is actually really interesting because he's saying that Rocket Pool can lose out on some branding here, by saying that we are least likely to get punished in a way that our ETH will get hurt. But he says that might be at risk. We can't really say that potentially anymore if we do go through with this partnership. This is for EigenLayer, however, they've got a whole lot to gain from this. And the main thing they've got to gain is, Rocket Pool's community is really outspoken, really zealous, and, they get a kind of approval, if Rocket Pool integrates EigenLayer, then what Val is saying here is then, people might think, they must be okay if the rabid cult members of Rocket Pool community have given it their seal of approval. So the next thing is we just talked about the risks that Val had from a very quick understanding of the paper. He says, then let's have a look at the rewards. He says the assumption is that EigenLayer usage might make a lot of money for node operators. this is potentially weak. It says current EigenLayer TVL is about $4.7 billion. It says it takes $47 million of annual revenue going to node operators in order for that to have a 1% APY. For context, Solana Q3 2023 security budget was $4 million. So EigenLayer would have to pay out like 10 times more than Solana's security budget in order to give that 1% boost to node operators. It says the ETH portion of an LEB8 currently earns 4.6% yield. That's rocket pool rewards and Ethereum staking rewards. It says the aggressive bond curves here represent about a 1% APY increase. So it's a very limited increase that they would get. You could spin it by saying that's like potentially a 20% increase or 25% increase in rewards, but in reality of things, it's a 1% increase as a hard number. And then of your collateral, yeah. So then he says AVSs may have higher requirements than staking. This could be a total bond, computing power, storage, internet requirements, etc. So I guess not every AVS will be for every user. Some will be able to handle them, others won't. This is LST restaking essentially has LST holders point their collateral as specific operators. There would be nuts to point their collateral to Waldorf at his house instead of a professional staker. This likely means home operators are essentially getting smaller multiplier on their AVS earnings. This is rocket pool is dynamic. If we follow the bond aggressive curve yields that we talked about on an episode a couple of days ago, this is there's a lot less excess security for AVSs to use. We simply may not be eligible. Yeah, so if we get to sublinear bonds, and if we're only asking for 1.5 ETH or 2 ETH per validator after a few validators, then there just might not be enough economic security in the rocket pool validator to leave anything for EigenLayer if there's a slashing or anything like that. It just might not be secure enough for them, because rocket pool will be kind of like juicing out every ETH of efficiency that we can with our protocol design. So TLDR, he says there are better risk reward plays available to us to increase node operator APY and make rocket pool stronger. He says again, and then he shows his first prize research for his rapid research incubator and like other research things as well. He says a quick little response for your essay, Jasper. So Jasper responded by saying, we'll probably respond tomorrow, but I just want to say that the tokenomics research is much, much more important than EigenLayer. And Val says, I think so too. And if we're riding our bond curves hard, I think we're a lot less attractive to AVSs. And Jasper says, yeah, I think Ken asked about that on the forum. EigenLab's folk response was, that's fine. It's up to the AVS to choose, which is fair to me. A far end curve mega pool will probably not be eligible for Espresso unless it has a bunch of stake allocated on top of it. Probably still fine for EigenDA though. The tokenomics design makes or breaks rocket pool. EigenLayer only has a chance to. We should design it around the best tokenomics rocket pool can have. What's left over is what's left over, and AVS is decide if it's safe enough for them or not. So this was really interesting that this kind of question came up. But one of the things that I was thinking was about especially for our small node operators and bringing on more small node operators. If we ask for 8 ETH collateral for one validator and then RPL on top, with node set, if that person shows 6 months of good node behavior and operation, then Nick was saying they could potentially in an ideal world get up to 20 validators on top. So I was crunching the numbers earlier, and that works out to be around 0.72 ETH worth of rewards, give or take, which is pretty much like 8% APY or APR. Like I said, I always get those confused, on top of what they're getting from their own validator as well. So that has a huge potential to like boost staking rewards, especially for very small node operators. So these are the kind of things that will need to be balanced out. But I think having and this is purely my opinion. This is not anything else. I think that this is something we should definitely pursue, and I think that we should definitely try to work out how it works. And I will be voting in favor of this research going ahead, and then seeing where that lands us at least gives us a better idea of how things stand. So finally, that is everything about where we stand currently with EigenLayer. And if there's any more new stuff that comes up, I'll be sharing that with you all. But I think that really does bring us up to date with where we stand as a Rocket Pool community now with the EigenLayer integration and kind of how that's all looking. I actually got a comment on YouTube today, which I can respond to on the show. So here, Clay Tucker says, for smooth brains out here with lots of rETH, on which side should we root for? You explained it in such a politically correct way that I can't tell where the incentives actually lie. For example, does one faction want to receive more rewards as node operator, and the other is more concerned about decentralization? Is this more about how integrating with EigenLayer will affect node operators in some other way? The true underlying question and incentives went way over my head because people never actually say what they mean. They talk around insurance instead. Help appreciate it. So I'll just take a second to answer these questions as I think that they might be. So I that's just my opinion as a community member and not with any added authority on top of it. So I said which side should we root for? Well, I can't tell you that. Explain it in a politically correct way where I can't tell where the incentives lie. I think the incentives lie with basically, do we want Rocket Pool to be the best in class LST with be able to say that we have the best security, we have the best headwind resistance, like any problems that might happen with other LSTs, Rocket Pool's not exposed to those. Those are all huge positives for Rocket Pool. And by opening yourself up to EigenLayer, then what that could allow is more stake to come online because people want those extra rewards with EigenLayer. However, it could open not rETH holders. The rETH holders, like I just explained, should be fine. It's just the node operators could potentially put themselves forward for additional risk. And rETH holders, like Jasper explained, could lose some rewards in the extreme case where all of Rocket Pool's node operators get exited or something like that. And then then that could cause problems for rETH holders. But that is up to you how you think likely or not likely that is. It says, for example, one faction wants to receive more rewards. It's not necessarily about rewards, but it's more about this idea potentially of being secure and being like really assured of the product that we offer, or then adding more risk to it potentially with the rewards not necessarily being properly outlined or obvious for people to see right now, because we have to remember EigenLayer isn't live yet. There's no protocol, there's no product there. It's just a huge TVL hole that they have, but nothing more than that so far. There's lots of unknowns. Okay, and then there's another question here as well about what's more concerning about and how integration with EigenLayer will affect node operators in some other way. So like I said, for node operators, they can take on the added risk. The rETH holders won't be taking on risk, hopefully, if the system works out. And says the true underlying question and incentives went way over my head because people never actually say what they mean. They talk around the insurance instead. So I guess, I think I've already tried to answer that, and Jasper's done something to answer that. If anyone has any questions, you can leave the questions in the YouTube videos. I'll try to respond as best I can. The best thing to do is come into the Discord and ask in trading, and people will be happy to point out any ideas or thoughts on that matter. Okay, we're moving on now. No more EigenLayer talk. So that was just 43 minutes. So here we have stakerocketpool.eth has released their latest DeFi guide, and in the DeFi guide we have things like the gamma strategies and different pools for rETH and rETH, and you can get up to 19% here. So there's information here about the different pools that are available, and it's the balancer ETH, I think Anchor ETH with 18%. I'll have a look a little bit closer in a second. But yeah, this was from Stake Rocket Pool. They just put out their DeFi numbers. Let's have a look at what the document actually says. So yeah, here is balancer rETH, Anchor ETH, liquidity providing, and then you stake the LP tokens on Aura to get around 18%. With rETH, rETH, and then that's on Uniswap, and then stake the LP tokens, you get around 14.5%. And these are being incentivized, by Balancer or an Optimism or with Arbitrum. So a lot of these are like layer two ones. On mainnet here in the last 24 hours, if you're on the Gamma rETH, rETH strategy, you can get 18.83%, which is 19%. And that is incentivized with RPL tokens from the IMC. So there's some really interesting yield here to be had. And definitely, if you are interested in, using any of these strategies, get on this document and find out what's going on, and hopefully it'll be rewarding for you. But of course, remember that DeFi is risky and you can lose what you put in. Next, we've got Notional here with some news, and Notional are saying that they're saying that rETH has been their most popular LSD since the launch of Notional v3 on Arbitrum. It says there's plenty of opportunities for rETH holders sitting on the sidelines. So here the variable lending rate is, they have a TVL of $5 million worth, and they're saying 0.8%. Their fixed lending rate, they have a TVL of $5.8 million, and that's 1.5%. So if you provide liquidity, there's a TVL of $5.2 million and you get 10%. And if you're using leveraged liquidity, which is kind of like a looping service that they offer within there, you can get 41% returns. And that's on Notional. Of course, remember that risk is present, and those numbers are really, really sweet. We've also got this update from Flat Money here, and Flat Money is saying that they're working with Rocket Pool's IMC to boost incentives for rETH on the balancer on base. So I guess those are the numbers that we were just showing before. Those are coming from Flat Money. And Flat Money have a testnet going live. That's going live like in the next few days. So it says whether you want to trade the rest or take a hands-on approach to learning about Flat Money, our upcoming testnet competition is for you. So you can earn the Flat Money tokens, Flat Money points, sorry, not tokens, points, if you take part in their testnet. And I don't know if those points are going to be worth anything, but that's an option available for you as well. Okay, next we got this article from Bloomberg Crypto newsletter, and they were saying, talking about how Coinbase, Kraken are grappling with Ethereum's diversification problem, and this of course is talking about the execution client diversity. And what's the reason why I'm covering this article in the episode today is because I actually have this table where I think they got this from, I want to say Hani Abu's website, but it might not be Hani Abu's, it might be Sonic X's. I'm not sure exactly whose. Yeah, client execution diversity, I feel that's where they got the information from. But it says Geth is by far the most popular execution client for Ethereum staking services. So yellow is Geth, pink is Nethermind, blue is Bisu, and there's two really that kind of stand out here. And well, there's Lido that kind of like, has got some pink in there, which is good. And there's P2P.org, which is all Bisu, which is really cool. But then Rocket Pool and Stakewise are the ones that actually have nice distribution of clients. Rocket Pool has 30% Geth, 24% Nethermind, 22% Bisu, and 23.7% unknown. And Stakewise has 42% Geth, with 29% Nethermind and 29% Bisu as well. So those definitely are, the two services that actually kind of stand out here. And it's really cool that Rocket Pool is one of them that's standing out. So huge kudos to Rocket Pool, the protocol. Okay, moving on from Rocket Pool news now, we have, well, this is kind of Rocket Pool news, but we finally have a date for the Dencun hard fork, and this will be taking place on the morning of March 3rd. That's Eastern time. It will be, I think, depending on whether we have daylight savings by then or not, I'm always confused about that, but it'll be at either 9 a.m. or 10 a.m., I think, or something like that. But yeah, it's on the 13th of March, so that's really exciting, on March 13th if you're in the US, and that is, I think, going to be really cool. The main thing that's going to be impacting Rocket Pool there, of course, as you know, is the beacon state route, which will allow the consensus layer and the execution layer to kind of talk to each other, and that is going to open up some really cool things in reducing the duties for the ODAO, but also, more importantly, letting NodeSet come online in a way that can make them effective. And I think that is going to be absolutely massive for NodeSet and helping them get online. So this is going to be some really cool stuff. And finally, we had this Hildobby cast where he showed a screenshot saying that 25% of all ETH is now staked. And of course, we had a big jump recently because of liquid restaking tokens and LST minting to put into EigenLayer, as their vaults are open right now. And we can see now that there's over 30 million ETH has been staked, and about 2 million of that I think is on EigenLayer. And we also have 25.11% of the whole of the network is now staked as well, which is actually pretty cool. 943,000 validators, It's going to be interesting to see how that works out as we get to 1 million and above, because that's when I think alarm bells are going to start ringing on the core protocol side, like from the ETH researchers, because I think they don't want to have that many validators online. However, I think Pateris was saying that we have 1.5 million validators on Leshki and everything's running just fine. So hopefully everything on Ethereum will be just fine too. On that note, I'm going to end today's mammoth episode. As I should say, any mistakes that I made in reading Jasper's papers are my mistakes. They're not Jasper's mistakes. Please reach out to Jasper if you still have any questions, or to me if I can answer any of your questions. I'll try to help as much as I can. But regardless of how you look at it, whether this EigenLayer thing works out or it doesn't work out, the next period for Rocket Pool is incredibly, incredibly exciting. And I think that, as Anthony Sassano said in Daily Way today, he says that this is a really exciting period for Rocket Pool. Whether the EigenLayer things works out or doesn't, that's one thing, right? Like, Rocket Pool is going to be more decentralized after Houston. Rocket Pool will have a layer 2 scaling solution in the form of NodeSet coming online very soon after that. Rocket Pool has extremely exciting tokenomic work that's being done by the community and the team working together that is going to really massively make every ETH deposited into Rocket Pool even more efficient. I think I was working out earlier that, like, if you have 32 ETH in Rocket Pool now, you can bring online 96 rETH. However, if you follow one of Waldorf's plans of sublinear bonding, with your 32 ETH, you'll be able to bring on like over 300, I think, or maybe even 400 rETH. Like, the scaling is just absurdly massive. It's really amazing. So I'm really excited for it, and I don't know if it's like my excitement is infectious or not, but I'm here every day telling you all and telling you all about the amazing stuff that's happening with Rocket Pool, and I'm going to keep doing that as long as you all keep watching. Anyway, thank you all for watching and being part of the Rocket Fuel community. I will see you all tomorrow. Bye.